the open. All-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I want to turn on this Becky quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want to stop it. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's from pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas outside, and about 5 hot picks for the day, cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and die. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETFs, making profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETFs. Hey, my family. Hey, go, what we doing, my man? And make profits. Hey, Shug, Mike, what we doing? And make profits. Yo, Wolf, Professor, what we doing? And make profits. That TTG money gang. And making profits. We some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. Today is Thursday. It's a day that ends in a Y, which means the market made a new all-time high. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you guys didn't know, we were a Benzinga FinTech Awards finalist for Best Data Analysis Tool in 2023. And we are currently the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, and individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, swing trade, and also cover long-term investing. Literally something for everybody here at True Trading Group. Now we take that university level of curriculum, we combine it with today's top tools, and also give you guys access to 8 professional trading moderators that are with you each and every single day from pre-market all the way through into the close. They're not gone after an hour and you're just left to fend for yourself. You will also be getting access to all of our members, the TTG family, nearly 10,000 members in 115 different countries. The most educated, successful, supportive, helpful community of traders that you were ever going to find, not to mention the real-time trade alerts from all the moderators and myself that collectively as a group have been able to maintain a cumulative win rate on all of our executions of just around 80%, now going on roughly the last 4 years. You're wondering why I should listen to anything it is that we discuss on this channel. It's because I didn't figure this stuff out on my own. I didn't figure this out by watching YouTube videos or sitting in Discord chats. I began my career working for T3 Alpha Fund in New York City, my first job out of college, where I had to go through a training program before the fund let me touch $1 of their money. Then 2008 happened, and that was the Great Recession. The stock market crashed, but also the same year I received one of the firm's Trader of the Year awards. Now you fast forward, and I'm the co-founder and head trader of TTG, and along with my team of 8 other professional trading moderators and a 30-person staff, we've helped thousands of members from all over the world to reach their goals. So if you guys are ready to learn, trade, and profit for real, you've come to the right place. Sunday through Friday, we go live on this channel with myself and other TTG Pro trading mods and special guests. We'll drop golden nuggets, give you free lessons, education, trade ideas, and commentary that can help you guys become better traders. All right, so if you haven't done so, smash that like button, show some love, subscribe to the channel, turn on your notifications, make sure you guys never miss out on any of these live streams. All right. So welcome, my entire TTG crew. A lot happening right now today. Reddit IPO, Apple lawsuit, Lululemon earnings, Nike earnings, FedEx earnings. So a lot going on. You also got jobless claims numbers today. And the jobless claims numbers, again, under expectations. It's incredible the way that this jobs market has held up, to my surprise and to many others' surprise. I would not have thought that the jobs market would still be as strong as it is currently this deep into the year. And it's a big reason why the markets have continued their rally to new all-time highs. And you had yesterday Jerome Powell in the Fed, and Jerome Powell was very dovish yesterday. Again, also a surprise to me. I didn't think that you were going to get a dovish Jerome Powell yesterday. I thought you were going to get a mildly hawkish Jerome Powell. So he surprised me yesterday. He really did. Not what I was expecting, but nonetheless, that's what Jerome Powell did, and that's what he said. And, you know, there was yesterday, you guys caught my live stream yesterday, we went over a full detailed analysis on exactly what transpired during the Fed meeting and what was it specifically that made the markets break out to new all-time highs after the statement and Jerome Powell's speech and Q&A. And coming into the Fed meeting, and if you guys missed the live stream yesterday, I'll just give you a quick summary on this, and then we're going to get into the action from the day today, Reddit IPO, Apple lawsuit, and then all the earnings for the day. We'll talk about all of that here with you guys live. But before, let's kind of recap how we got to where we are today, which is a brand new all-time high. And lately, it seems like almost every other day or every week, you're printing new all-time highs as we've broken above 5,200 on the S&P for the first time ever, right? And you got follow through off that new all-time high today. So you broke through the all-time high yesterday. You got the follow through gap up today. Very low volatility day today in the index. Basically just gapped up and went sideways. But we did hold and we gapped up and we held that new all-time high. Now, yesterday, the Fed kept rates exactly where they are. They did not cut rates. That wasn't a surprise. That's not why the markets moved higher. Everybody knew that the Fed was not going to cut rates yesterday. It was a 100% likelihood of them actually pausing yesterday. So that was already priced in. What was uncertain was, what is Jerome Powell's reaction going to be to the recent higher than expected inflation reads that we got for January and February? So inflation for January and February came in higher than expected. And some people were concerned, well, is this the start of an acceleration of inflation, or is it just a little bit of a blip on the radar, right? That's what everybody kind of was wondering. And Jerome Powell came out, and Jerome Powell said a very specific sentence yesterday. And it was the following: as labor market tightness has eased and progress on inflation has continued, here it is. This is the line. The risks to achieving our employment and inflation goals are moving into better balance. I'll say that to you again. The risks to achieving our employment and inflation goals are moving into better balance. That one sentence is a brand new sentence in the Fed's statement. It is also a significant one, not just because it is new, but because Jerome Powell made a point to specifically say that sentence verbatim, not once, but twice during his opening statement. Everything that is in a Fed statement is deliberate and intentional. The words that they use, the phrases that they use are done with very careful thought, editing, and planning. So the fact that he said that statement twice is Jerome Powell giving a message to the markets that we do not feel like we are caught between a rock and a hard place. What would have made the markets go down yesterday, and then probably therefore again today, would have been if Jerome Powell said that he's actually really concerned about the higher than expected inflation prints we got in January and February. The reason why that would be a problem is because if inflation were to accelerate, and then if the labor market was to weaken, if those two things happen simultaneously, that puts the Fed in a position where they're stuck. The reason for that is because the solution to one of those problems is poison to the other. So you can't bring down inflation if it's accelerating and then also strengthen the labor market if it's weakening. So the only way for you to bring down inflation if it were to accelerate would be to keep rates where they are for a much longer extended period of time, or maybe even raise rates further. But if you were to do that to bring inflation back down, if it was accelerating again, that would then hurt the labor market, and the labor market would start to weaken. And if the labor market was weakening, then the way for you to fix that would be for the Fed to cut rates to then spark economic activity, growth, companies hire, and labor market improves. But if you were to do that, cutting rates would help inflation accelerate. So if those two things were happening simultaneously, the Fed would be in a really tough spot. And from history, what history will tell you is that if the Fed is ever faced with that decision of, oh no, which one do we focus on? They're going to focus on fighting inflation probably 100 times out of 100, because it's a lot harder to bring inflation back down once it gets unanchored and you start to lose control of it. That's actually a lot harder to do than it is to spark the labor market. The Fed has other tools at their disposal to bring the economy out of a recession if it were to fall into one. It's much harder for you to bring inflation back down once it gets unanchored. Even though you had this massive rise in inflation over the last several years, it's coming down now. But even during that entire rise, it never became unanchored. What does that mean when inflation becomes unanchored? The long run inflation expectations, 3-year, 5-year inflation expectations, never got unanchored to the point where people thought that 5 years from now, inflation would be higher than it is in 3 years from now, and it'd be higher than it was today. So the entire time when inflation was rallying, we went all the way to like 9% there back in 2022. You always saw the 3-year and the 5-year inflation expectations were all muted, and they were all significantly lower. So that means that inflation expectations are still anchored. When they become unanchored, they float away, right? Just like when a boat becomes unanchored, it tends to drift away. Same thing with inflation expectations. When they become unanchored, they tend to drift away to the upside. And that is a problem, because when inflation expectations start to rise, inflation becomes self-fulfilling almost. Because if companies think that in 3 years, inflation is going to be substantially higher than it is today, then you'll start to see price increases in the supply chain and price increases pushed down to the consumer, so that to prepare to offset those higher prices, which therefore then raises prices and causes inflation. It's a vicious cycle when that happens. That has not never, but it has not happened throughout this COVID inflation cycle. And the Fed wants to keep it that way. And right now, inflation expectations are well anchored. But Jerome Powell came out yesterday and he made that statement. He made that statement very deliberately, and he made that statement not once, but twice, verbatim. As soon as he said that, the markets ripped. As soon as he said that, that's when we were live with our members inside of chat, as we always are. And right when he said that comment, it was right here. Okay. It doesn't, you can see it. It was literally, he said it right there. Right there is where he said the statement for the second time. And as soon as he said it, the markets ripped to new all-time highs. And then he was asked a question by a reporter right here. And right here, the question he was asked by a reporter was specifically about the 2 inflation nut reads that we got in January and February. And how concerned are you? What does this mean? What do you need to see in order for you to be concerned? And Jerome Powell said very calmly, I don't disregard any data points. We consider all data points. They're all important. We don't disregard any of them. But what we saw from January and February inflation, although not what we would have wanted to see, does not change our view on the trend of inflation is downward. He said it's more of a bump in the road, a blip on the radar. Inflation is not just going to go straight down. You're going to have this little bumpy kind of stair steps to the downside. But he said that they feel comfortable that the trend of inflation is still to the downside. And then when you got the dot plot which you don't get the dot plot every Fed meeting. So you only get the dot plot, I think it's every quarter that you get the dot plot. The dot plot showed that only one Fed member out of all the voting members, one of them changed from 3 rate cuts to 2. And that left that the general consensus of the Fed was 3 rate cuts this year. And it was 3 rate cuts coming into this meeting. So they didn't change that. If Jerome Powell and the Fed were concerned about those earlier, the higher than expected inflation numbers, if they were concerned, you would have seen maybe 3, 4, 5 Fed members go from 3 cuts to 2. And if 3 or 4 Fed members went from 3 cuts to 2, that would have changed the Fed as a whole, their consensus of 2 rate cuts then. And if that happened, then that would have signaled to the market they are maybe a little bit concerned about those hotter than expected inflation prints. But again, that's not the case. That's not what happened. They left it at 3. Only one person changed. Jerome Powell made that statement. That makes people feel good. They're not caught between a rock and a hard place. And he answered that question specifically about the higher than expected inflation. It was a very dovish Jerome Powell, much more dovish than I was expecting him to be, if I'm being quite honest with you guys. And the markets rallied to new all-time highs because of it. Then you get the jobless claims number today, and that's under expectations. Not only were the initial claims under expectations, the continuing claims were under expectations. And as long as those numbers come in light, the jobs market is totally fine. You have 2 different types of jobless claims, initial and continuing. Initial jobless claims are just simply the people that are filing for unemployment benefits initially, meaning, hey, I just lost my job. I got to file for unemployment benefit. The continuing jobless claims are the people that continue to file for those benefits because they can't find another job. When you see the continuing claims higher than expected and starting to rise, that's really the first warning sign that the labor market is cracking. Because that shows you that not only are people losing their job, but they can't find another one. That is the sign of a weakening labor market. That is not the case right now. It's not even close. It really is not even close. The unemployment rate that we got last month is 3.9. Yeah, did it tick up from 3.7? Yes. But let me explain to you. The average unemployment rate for the last 23 years is right around 5%. We're at 3.9. So you're still well under an over 2-decade average unemployment number. So the labor market still is holding up well. And inflation, according to Jerome Powell, is still in that downward trend. What would really throw the markets a curveball would be if in April we get March's inflation numbers, and March's numbers are also higher than expected. I don't know if the market's going to think that it's a blip on the radar, it's a bump in the road if you get 3 consecutive months of higher than expected inflation and accelerating inflation. Accelerating, that's the key point. It's not even so much, I think, at this stage with inflation around 3% or so. I don't even think it's hey, we expect it to come in at 3.2 and it comes in at 3.3. As much as it is it lower than last month? If it's lower than last month, at least, it's higher than we thought it was going to be, but at least it's going down. And as long as it continues to go down, and the markets feel really great about where inflation and where the labor market and where everything is and where the Fed is with everything, and probably feels really, really good about the soft landing. Obviously, the market feels good about the soft landing right now. Otherwise, we wouldn't be sitting at all-time highs. So the market's kind of already made up its mind that soft landing, they made up its mind a long time ago, that soft landing is the most probable outcome of this entire process. And the market still feels okay that we're going to get 3 rate cuts this year. Morgan Stanley actually came out today and said they think there's going to be 4 cuts. Now, I don't know if that's a bullish or bearish thing. Like if you started to see, and this is something I thought about today, and I'm going to speak openly with you guys, just to understand kind of my thought process. If you started to see, let's say, for example, like Morgan Stanley, and then maybe you see like Bank of America, like let's say a couple different firms are like, we actually think there's going to be 4 rate cuts this year, not 3. Is that bullish or bearish? And there's an argument to be made for both sides of it, right? You might say, well, oh, that's bullish. There's more rate cuts than what's expected. Or is it? Are they saying we think we're going to get more rate cuts than 3 because we think that the labor market's going to weaken throughout the year and we think the Fed's going to have to cut a little bit faster than they initially think they're going to? So there's an argument to be made there, both sides. I don't have the answer yet. I really haven't decided what I think about that. I think that that's really something you're going to have to make a decision when that time comes, because you have to see what's the state of the labor market when those cuts are happening. If the labor market is still kind of right where it is today and those cuts are happening, it is certainly bullish. But if you're getting like an unemployment rate that like surprises and it goes to like 4.4, right? 4.4, 4.5, and like you're getting jobless claims numbers that are higher than expected, then I would say that would probably be a negative thing, that they're cutting more than anticipated because they feel like, oh no, the economy's slowing and the jobs market's weakening. We really got to start cutting. And I would see that as kind of a negative thing. So that's kind of, the bullish and the bearish case for that if that were to happen. So I haven't really decided yet on whether I think that more than 3 cuts would be bullish or bearish. I think you really have to see what the labor market looks like and what that employment data looks like at that time that those rates are coming through to really make that call, right? Because it's one thing for the Fed to cut rates because they can. It's another thing for them to cut rates because they feel like they have to, right? The Fed cutting rates because they can is a very bullish thing. The Fed cutting rates because they feel like they have to is actually a bearish thing. It's why you might have seen people talk about on social media a lot about when the Fed finally starts cutting rates, it's not a good thing. It's not a buy signal. You might have seen some of these posts on social media, people showing you like charts throughout history of when the Fed cuts rates and then what the market actually does after the Fed cuts. But that data that you're looking at, that chart that you're looking at, not that it's not true or accurate, you have to understand why that is. Because all of those instances, there was recession, right? So you had, maybe there was one other one, I think, that it wasn't. I think it was in the early to mid 90s, I think, was the other time that actually was not the case. But a lot of those other situations, the Fed was cutting rates because the economy was going into recession, and therefore the stock market went down. That's very, very different if the Fed is cutting rates and there is not a recession and there's actually a soft landing. That I think is actually a bullish, catalyst for the markets. So if there's not a recession, the Fed cuts rates, then I think it's a good thing. But we'll have to see what happens when that time comes. I'm not here to, I'm not on this channel to predict the future. I'm not on this channel to, make calls 6 months from now on what I think inflation data and jobs data is going to look like. My job is to sit here as a trader and say to myself, okay, well, if this, then that type scenarios. If this happens, what do I think the market's reaction is going to be? And how do I position myself the best to make money from it? That's my job. That's what we do as traders. If you talk to any trader, not one trader is going to tell you, yes, I can predict the future. I am a psychic. That's not how successful traders are able to be successful, because they can predict the future. Successful traders are able to be successful because they're very good at identifying high probability setups that are proven and back-tested strategies, and they control their risk on the times that they're wrong. Because everyone's going to be wrong, including myself. Okay. I make losing trades. I have red days. I don't have 100% win rate. I don't claim to. Right? But losing is part of trading. Your success as a trader is a culmination of your wins and your losses. They're equally as important. Don't fight losses, embrace them, keep them small, and move on when you encounter one. And just make sure that the setups that you go after are setups that you would go after 100 times out of 100. And if you have a back-tested and proven strategy with maybe a 68% win rate, well, then you know that even at a 68% win rate, 32% of the time, it's not going to work. And those times that it doesn't work, you can't blow yourself up or lose a week's worth of profit in one trade that's wrong. You got to make sure you control your risk, stick to your risk tolerance, stick to your stop losses, and then move on to find the next trade. That is how successful traders do it. But a lot of people don't talk about that. They don't talk about that stuff because it's not sexy. They don't talk about that because it doesn't sell memberships. What sells memberships is people coming on and claiming that they're the world's greatest traders, that they make $10,000 a day within 10 minutes and they're done by 9:40 in the morning, and they go and enjoy their day and go to the beach and go drive around in Lamborghinis and take helicopter trips around the mountains. Like that's not the way that it works. It's not the way that it works. I didn't get some special super top secret indicator when I was, working on Wall Street that I've passed on to members of True Trading Group to help them make money, that nobody wants retail traders to know about. That's not what happens. That's not what we do at True Trading Group. If you're looking for some type of special super top secret indicator or chart pattern, you're in the wrong place, and you can just sign off the live stream right now. I'm never going to tell you what I think I'm never going to tell you what you want to hear. I'm going to tell you what I think that you need to hear, like it or not. Some people love me for it. Some people hate me for it, but I'll always tell you what I think you need to hear and not what you want to hear. And what you need to hear is that trading is not easy, but it's also not impossible. What you need to hear is that trading can be done while working a full-time job. 82% of our 10,000 members have full-time jobs and work over 40 hours a week. They use our mobile app so that they can get notified whenever our moderators enter and exit positions in real time. You need to know that you don't need $25,000 in your account in order to trade. We have a lot of members that started with just a couple $100 in their account. You need to hear that I don't have some super special AI trading algorithm that's going to make money for you while you're sleeping. You need to hear that there is not some chart pattern that works 99.9% of the time. But what you also need to hear is that trading is not a get-rich-quick scheme. You're not going to be a millionaire overnight. It's a process and it's a journey. And you need to hear that you will get from this what you put into it. If you're willing to actually learn the proper way how to navigate the markets, if you're willing to put in some effort, I'm not saying you need to give me like 20 hours a week. Just give me a couple hours a week. Give me a couple hours a week. Spend some time to go through the course material on our platform. Partake in study group sessions and boot camps if and when you can, and take your time. Too many people join trading groups and they just go balls to the wall right out of the gate, just throwing half their account into trades, blindly following a moderator because a moderator sends out a trade alert. That's not the way for you guys to find success. You ask any one of our members that's successful, and there's a whole hell of a lot of them. You ask any one of our members that are successful, they'll tell you that that's not the way to do things. The way to do things is to take your time to actually learn and educate yourself on what you're doing. This is not a joke. This is your life. This is your money. And it's your potential. And it's your opportunity. And it is also your risk. So you better take it seriously, because we do. And those that do take it seriously get serious results. And it's not just because I claim that to be. It's because this is what members actually say. And I'll prove that to you. Members, do me a favor and type the number 1 if you're making money and becoming better traders with True Trading Group. If you are making money and becoming better traders with TTG, type the number 1 in chat right now. Now, the people that are on this stream that are maybe not members of True Trading Group, just pay attention to how many people type the number 1. Because guys, these are your friends, your family members, your coworkers. There is no reason why these people can do it and you cannot. They're not luckier than you. They don't have more time than you. They're not more experienced than you. They literally were you. Some of them weeks ago, months ago, years ago. They were you on a live stream, listening to what I or another moderator had to say, trying to determine whether or not they think that myself or the people on the stream know what the hell they're talking about. They maybe paid attention for a couple of days or a couple of weeks, some of them even a couple of months, and realize that I come on the stream, I stick my neck out there, I tell you exactly what I think is going to happen tomorrow, the next day, the next week. I don't just talk about what happened today. I have no problem doing that, not because I'm right all the time, but because I'm right a hell of a lot more than I'm wrong. And when we're wrong, we own it. And when we're right, we talk about it. Either way, we learn from it to help our members become better traders and to help them make money. So Those of you that are not members of True Trading Group, okay, for those not members yet, what I'm going to do right now is I'm going to explain to you guys how you can join True Trading Group, what you actually get with it. I've got a coupon code that's actually still available for you guys from yesterday that is actually still valid. Was supposed to be taken down today, but it is still live. So I'm going to give it to you now because it is still working. And then by tomorrow, or maybe since tomorrow is already Friday, maybe it'll just be Sunday. I don't know. But this coupon code that I gave was last night was supposed to change going into today, but it's actually still valid. So I'm going to explain to you how you can join because we're actually offering a 50% discount on our annual membership. The annual membership to True Trading Group includes all of our courses. It includes all the trade alerts, the chat room, the mobile app, a video library with workshops, the watch list from the moderators to tell you what stocks we're focused on with entry and exit prices. All of that is included when you guys join the annual membership at True Trading Group. Now, our membership is normally $1,212 for the year. However, if you guys use the coupon code I'm about to give you, it drops it down to just $597 for the whole year. Do yourself a favor and go to ttgoffer.com. That's ttgoffer.com. Okay. Then everything you see on that page is included for the $597. When you hit that page, the price will say $12.12. You must manually type in this coupon code, TTG121. That's TTG121. Click apply code. The price will drop to $597. Check out and you're good to go. Now, we also do offer a double your money back guarantee. I don't want you to think that I'm just all talk. We back it up. We back up what we say here with our own money. So anyone that joins True Trading Group, you pay the $597. If you go through our courses, pass our quizzes, and attend one study group, you have the whole year to do this. So take your time and go at your own pace. Okay. It's valid for the whole year. If you do those things and you are unable to make enough winning trades to equal the $597 membership price at least once, you cannot do that. We will give you back $1,194. Double what you're paying to join. That's double the $597. We do that to prove to you how serious we are about the platform that we have created and how much we stand behind it. We see the results that members have. Considering 78% of our members stay with us after they join. They've either renewed their annual membership or they became lifetime members of the community. And we have a refund rate that's less than 2.5%. That's why I have no problem offering double your money back. If our refund rate was like 12%, I wouldn't be able to do that. It wouldn't make sense. But since it's less than 2.5%, we can. And we have no problem doing that. It proves to you how much that we believe in the platform we've created and shows you, gives you peace of mind and holds us accountable. And I think there's nothing wrong with that. The double your money back guarantee, it's right there on the checkout page. Go read it. It's real. It's right there in black and white. So go to ttgoffer.com, use the code TTG121, click apply code. That price drops all the way down to $597. You guys check out and you're good to go. If you have any questions about our membership at all, just send us a text message. We're fully transparent. We are an open book. You have any questions about myself, about the courses, about anything, you text us. 1-888-306-8783. The phone number is right down there at the bottom of your screen. 1-888-306-8783. All right. So there you guys have it. All right. That coupon code TTG121. All right. Let's move on back on over to the charts. Let's talk about what we got cooking here. Because a lot happened today. I'll start with the Reddit IPO. I'm sure a lot of people want to know about the Reddit IPO today. Here she is. We opened up at $47. All right, we opened up at $47. We shot all the way to $57.80. All right. And then you can see that we rolled it all the way back over to drop down, make new lows, and close right around here, trading now around 49. Okay. So we're trading here, trading right around 49. Now, I have no intention on putting the stock in my long-term portfolio, but to be fair, I typically don't ever put IPOs in my long-term portfolio. It's not something that I do. I usually will wait for several quarters of earnings before I consider putting a brand new IPO into my long-term portfolio. So it's not even necessarily something that I have against Reddit. I give IPOs several quarters of earnings before I go ahead and put it into a portfolio. I really want to see real true price discovery. Like where does the price of this stock end up? I don't care if it goes to 80. I don't care if it goes to 20. I just want to sit back and wait and let them come out with earnings and see how the company is doing earnings wise. If they are, if they're beating expectations, if they're not beating expectations, if they're raising guidance, lowering guidance, if they're having troubles, economically, like I just want to see what the company's doing, right? You've got the play here with Reddit. There's the potential suit against with the FTC, with something that they've got going on. We got to see how that plays out. And then you've got really their biggest opportunity with Reddit are licensing opportunities for their data. That's really how they're going to do this. That's really how that they plan on making money. It's using, it's the data that they have collected, the data that they have available, and then licensing that data. So I don't really know, how successful they're going to be in doing that. So I'm not really necessarily looking at this thing for, a long-term play. I might look to trade it. You looked like we were going to roll over there in the middle of the day, and then you kind of stuffed right when you broke that opening print low. But a couple levels that are here, I really only see 3 levels so far. Okay. I thought that I only see 3 levels, right? And let me just draw them out for you. Obviously, you have the high, right? You have the high of the day, and obviously you have the low of the day. That's obvious, right? But the only mid range level that I see is right here around 51.5. And this is really it. You got nice little resistance here at 51.5. Okay, in the middle of the day. And this is really all that you have to work off of. IPOs are really more based on momentum type of trades. You can kind of get in there with level 2 off the open on IPOs, because level 2 is actually pretty clean on IPOs. As it trades more and more and more and more and more, level 2 will kind of get full, and will not necessarily full, but it just becomes sloppier. It's like it's easier to read level 2 when you're watching like a small cap trade than it is watching like Apple or Tesla trade. You can get more information, true information on really where buyers and sellers are when there is lower levels of liquidity in like small caps than in the large caps. But then right off the open, it's like all that order flow it's so heavy, and there's really the lead market makers that are really taking that order flow. It becomes a little bit easier to start to see that. If you are trained in level 2, it's a little bit easier to see it. Okay. It's a little bit easier to see it on IPO. But other than that, it really is more of a momentum based play. And these are the only levels that I take from this day. And you can say another minor level, maybe at the opening print, which is the 47. That's really it. I don't have this on my list as like a screaming buy or a screaming short. I don't see enough here for me to really have high conviction in any particular direction. So for me right now, it's just I'm observing and I'm waiting until I see something that makes me feel like I've got a high probability, high conviction long or a high conviction short. I actually got shares to short today on Lightspeed. They were actually cheap. They were less than 4 cents a share on Lightspeed. So, very easy to borrow Reddit shares for the short. They also don't have a lockup on a lot of the shares that they issued. So they gave shares to users of Reddit, like active users they gave shares to. They gave shares to moderators on Reddit, and there's no lockup on those shares. Those people were free and clear to sell today off the 34 priced IPO. They could have sold today at 54 if they wanted to and made a nice little hefty profit. So, maybe that's where this selling pressure came from, is maybe some of those shares coming out right off the gate. But I'm going to wait. I don't see anything that gives me high conviction either way. So we're going to play the wait and see approach here on Reddit. We have to welcome Dayuk. I think I'm pronouncing that correctly. Dayuk just joined the TTG family. Everybody welcome Dayuk. Welcome to the TTG fam, Dayuk. Guys, again, go to ttgoffer.com and then use that code TTG121. Click apply code. The price then drops down to $5.97. Check out, and then you guys are good to go. You got the W money back guarantee. Don't forget, just all you got to do is go to the checkout page. Right there in black and white is the money back guarantee. Go read it. It's in black and white. It's right there for you all to read. Yo, Zachary, what's up, my man? Welcome back, Zachary. Zachary is a new member. Zachary became a trial member on the 15th, an annual member on the 17th, and literally yesterday became a lifetime member of True Trading Group. Absolutely incredible, right? Absolutely incredible to see. But listen, when you know, right? When you see other groups and then you experience something like True Trading Group, you realize that nowhere else that you guys would rather be. So I like it, Zach. I got to tell you, I'm not surprised. But it is awesome to see that you're already a lifetime member of the group. All right, so that's Reddit, right? Those are my thoughts there on Reddit. I do want to point out to you guys something that I'm seeing in the crypto space, because I think we might be. You had actually a note today from JP Morgan. A note today from JP Morgan said that Bitcoin is severely overbought right now. And there's something I actually noticed today that I want to point out to you, which is the potential formation of a head and shoulders pattern. And what I think would be absolutely picture perfect. I think it would be absolutely picture perfect if we got the following price action. If we get this following price action, it's going to take a couple more days for this to kind of play itself out. But hear me out. I want to show you what I'm looking at. First of all, you got this breakout through the low 50s. Now, the low 50, this is the ARK Bitcoin ETF. The reason why I like to pull this one up is because the price of it is pretty close to the price of Bitcoin. So like when ARK is at, 65, it's Bitcoin is right around 65K, the way that the ARK ETF priced themselves. So like IBIT, which is another one, like that's at 37. Right. But Bitcoin, obviously, you guys know, is in the mid 60s, mid to high 60s. So I like kind of looking at ARKB. It's kind of close to the price of Bitcoin. So what I see here is you see this resistance level that you had here on the ARKB ETF, right? Which actually lines up with that resistance that you had in Bitcoin right there in the low 50s. And once those low 50s broke, all hell broke loose and the thing rallied to new all-time highs, right? Excellent. But what you actually, and that level was never tested. So once you broke those low 50s, it never was tested. You just gapped through, you just broke through it and just ran. But look at what's starting to form. I see a little bit of a head and shoulders pattern. So if you take a look at this, you could have the potentials of a left shoulder, head, and what if you start to form a right shoulder? And then you have a neckline. That gives you a head and shoulders pattern that could potentially trigger a break of the neckline. And if that does trigger the break of a neckline, you could see Bitcoin drop all the way back into the mid to low 50s and test that level. And then when it gets to that level, I think that level holds. And then that's your last buy point before Bitcoin really goes to new all-time highs. I'm still bullish on Bitcoin. I just think that there's another pullback coming before you make your next leg higher. So I kind of looking at this and I'm like, man, that would be sexy. That would be a very nice setup. So let's see if we find resistance now in Bitcoin in the high 60s. So if we find resistance like 68, 69, we tap that, then drop back to 64. That could give you the setup to break the low 60s neckline that you guys see drawn there. And then that would, if that does happen, then you would drop probably down into this zone of like the mid 50s to retest that breakout point. Then that becomes your new support level. Used to be resistance, now support. And then you rally from there. And that could be a great buy point for the ARKB or for Bitcoin, whatever. That'd be a great buy point. So that's something that I just kind of caught my attention today And I wanted to just kind of run it by you guys to kind of show you what I'm thinking and show you guys what I'm seeing. And although it's not a trade that I'm in right now, or even a trade I plan on getting in the next day or two, it's something that's now on my watch list to see if that starts to form. Then guys, that could be a beautiful play for us to the short side on the neckline break. And then we can start getting long in the mid 50s for the next rally to the 70s, maybe even the 80s. So I think that's nice. You also have the Bitcoin halving that's coming up. Now, previous halvings have actually led to pullbacks in Bitcoin. So you're also lining up with this event of the Bitcoin halving that's coming up. And then you have this possible head and shoulders. That could be a nice setup. So I really want you guys to keep this on your watch list. Okay. I really want you guys to keep this idea on your watch list, and I'll talk you through this. Like if I'm really starting to see this come to fruition, and obviously if I'm getting into a position, I'll let you guys all know. But I think it's going to take a few more days for this to set up, but it's something that I think is pretty decent, and I think it needs to be on people's watch list. Bitcoin, cryptocurrency stocks like Coinbase, Mara, MicroStrategy, they have been excellent, phenomenal trading vehicles. There's so many ways to play crypto now. You can either actually trade Bitcoin yourself. You've got the BITO ETFs. You've got GBTC. You've got ARKB. You've got IBIT. You got Coinbase, Mara. You got MicroStrategy. There's so many different ways for you guys to play this that, it really has become an excellent trading opportunity for us. We have to welcome Omar. Omar just joined. Omar actually used to be an annual member in the past and just came back home. So everybody welcome Omar back home. Everybody welcome Omar. Omar, welcome to the family. Blockchain Buck, I'm going to be honest with you, brother. Blockchain Buck, I see your question. Do you have any interest in altcoins like Solana, Fetch, Near, ICP? I got to be honest with you, Blockchain Buck. I am really not a crypto guy. The only crypto that I really follow is Bitcoin and Ethereum. I don't know much about altcoins. I don't own altcoins. I don't trade altcoins. I'm not the person to ask, just being honest with you. I kind of know I know my expertise, and I know what I'm not. I don't claim to be a crypto expert. The only crypto that I personally own is Bitcoin and Ethereum. I don't own any of those altcoins. So I'm not the person to ask for that kind of stuff. My partner, actually, though, Adam, who's my business partner and co-founder of True Trading Group, he is very much into crypto. He would be the person to ask on some of the altcoin stuff. I don't follow those things. Just being honest with you. So Omar, welcome back to the family again, guys. This actually goes for anyone that used to be a member, or maybe you guys used to be trial members. If you guys want to join us for that 50% discount, you actually have to send us a text message, because we just have to whitelist your email address since you've already had an account. So just send us a text to 1-888-306-8783. The phone number is right down there at the bottom of your screen. That's 1-888-306-8783. Just text that number with any questions also. Again, if you guys have any questions, you have questions about me, the mods, the money back guarantee, our courses, trade alerts, the tools, the platform, the mentorship, anything, text us 1-888-306-8783. We're fully transparent, folks. We are an open book. All right. So Omar, welcome back home, brother. Glad to have you back. All right. So that's something to pay attention there. And while I say that, you have what looks like you might be starting to get a topping formation in Coinbase. Now, if you look at Coinbase, okay, if you're looking at Coinbase, let's just take a look at this. You've got this failed breakout today. You had this very obvious resistance at 270, right? You had triple top here at 270, 1, 2, 3 top. You tried to break it today. You went all the way to 276 and you failed. Closed all the way back down at 261. So it's a failed breakout. This is also a shooting star candle. This is a bearish candlestick. If this does not result, meaning if you do not engulf this candle tomorrow, like if you get a candle that looks like this, then it's not a bearish looking setup. But if you get a candle formation that's underneath and looks like this, that's actually a bearish candlestick. So now if you think about this, you have this possible topping formation in Coinbase while you have maybe the right shoulder forming in Bitcoin to then pull back into the 50s or at least the low 60s. That could give you a nice topping formation there on Coinbase. The other thing that I notice is while you've made this recent rally, right, volume is actually slightly on the decline, not major, but you can see if you look at the volume bars, Joe, if we can just drop that message on the bottom of the screen just for a moment. So you guys see on the bottom, see this decreasing volume while you're making new highs. So decreasing volume while you're making new highs, that could be bearish. The other thing that I want you guys to take a look at is actually bearish divergence on the MACD. So the stock price makes new highs, but the MACD does not. That's also a little bit of a topping sign. You also just recently had a signal line crossover to the downside. There's a signal line crossover to the downside. That's also a bearish signal. When you look at when you had a crossover to the upside right there in early February, that was actually when we got long Coinbase. I left so much money on the table on this trade. This is actually my biggest P&L trade to date. Was I got long Coinbase at 117 and we got out of it in like the 140s or so. But then you can see, obviously I didn't catch that, right? We caught this. I didn't catch that. So I was already out of the trade by the time that happened. But still just a monster trade for us. But when you go back and you look at, okay, the last time the signal line crossover, look what happened. You got this huge rally. Let's go back prior to that. Here's a signal line crossover to the downside. What happened when the signal line crossed over to the downside? You dropped. Then you had the signal line crossover to the upside. You rallied. Now you got a signal line crossover to the downside, and you got the topping tail right up here at 270. Is that now an indication that Coinbase is going to do that? Interesting, right? Interesting little setup. So this is some of the things that have caught my eye today, right? So during the trading day, we're always looking around. Even if you're not trading something, or even if you don't have trades on, we're always looking for opportunities and looking for, situations and setups that give us some high probability setups. And this is one that I'm looking at that I want to keep eyes on. All right. So there you guys have it. That's Coinbase. All right, let's go talk about some of the earnings that we got today. And we got a couple of earnings, 3 earnings today that I think are some big ones. Nike being one of them. Nike had earnings per share of 98 cents against 78 cents was expected. And they also beat on sales, 12.43 billion against 12.28 billion expected. And you're getting a nice little pop, up 4.5% on the day, right? So 4.5% on the day, and you're getting a nice little pop there on Nike, 4.5% on the back of those earnings. So pretty good earnings release there. There were some concerns about Nike, about slowing growth in China and in Europe. So nice to see Nike kind of coming through with a pretty decent report there. Then you also had Lululemon, which is a real disappointment here. Lululemon getting hit, all right? Getting hit. They gave weak guidance for the first quarter. Weak guidance on the first quarter, and the markets do not like it, right? So what are the numbers? They beat on earnings per share and they beat on sales, but their guidance was light. So earnings for the fourth quarter were 5.29 cents per share against 497 estimates, 3.205 billion in sales versus 3.19 billion expected. So those are slight beats on sales, and then you have the slight beat on earnings per share. But then here you have the guide. Q1 revenue, 2.175 to 2.2 billion expected revenue. That's against 2.25 billion expected. And earnings per share, 235 to 240 against $2.55 expected. So some light guidance there for the first quarter. And that is giving you this 8.5% drop on the day. The stock is down a lot more than that from the close because Lululemon was up substantially today when they announced earnings. We're down 8.5% on the day. So that's off of yesterday's close, not today's close. If you go by today's close, you're down even more than that. You're down over 10% on that if you go by today's close. Okay, but yesterday's close, you're down 8.5%. You can see this huge drop from 482 all the way down now trading at 430. So substantial drop to the downside there on Lululemon. Coming up to a pretty big support level, though. I think those low 400s is a nice support level. You also have some structure support at 420 that you might get a bounce off of on Lululemon, off of that 420 level. Not a stock that we usually trade. I think I've only like day traded or swing traded Lululemon just a handful of times over the last several years. But, you know, it's a big mover today after hours on their earnings. I think the big surprise of the earnings report is actually FedEx. You want to talk about a massive move and a recovery from a huge fall from grace. This stock got pulverized in 2022 when they had a horrific earnings report. They had horrible cost controls. Expenses were soaring. They were in really bad shape. And the CEO came out, and the CEO really made a push towards getting their costs under control. And they've really turned this company around in the last year. And they came out with their earnings, and they just lit it up. Stock is trading up 15%, just absolute monster of a move. And let's go through these earnings. 386 versus 345, okay, on the earnings per share. Their sales were a slight miss at 21.7 billion versus 22.04 billion expected. But here's the thing. The board of directors authorized a $5 billion share buyback program. That's in addition to the already existing $600 million that remains available for repurchase under the 2021 stock buyback plan. So they approved the stock buyback plan in 2021. There's still $600 million left that they could purchase from that. And they just approved another additional $5 billion. So you're going to be looking at $5.6 billion, okay, on the share buyback program. They plan to add an additional $500 million in Q4. So now you're looking at their guidance gives you your guidance is going to give you, let's see here. Guidance gives you 17.25 to 18.25 earnings per share for the full year. That's against 17.4 expected. Permanent cost reductions from the Drive Transformation Program is 1.8 billion. So again, what we talked about, right? Getting those costs down. 1.8 billion cost reduction from the Drive Transformation Program that they implemented. So this is what you're seeing, right? You're seeing the company in their earnings report go over the cost reductions that they have been going through, layoffs, you know, the 1.8 billion that they're saving on the Drive Transformation Program. They also, their margins on FedEx Express, their margins were higher than were expected. Now you're really digging into like the details of their earnings, not just, hey, sales were good or sales were bad, right? Now you're getting into the details, their cost reductions, how much they're saving on different programs that they've implemented. Have they been successful in getting costs under control? And the answer in this earnings report is yes, 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 yes. And that is why the stock is trading up 15%. It's a great earnings report for the company. It's a huge breakout for the stock. They're clearing out some big resistance levels. And now the only resistance level that you really have to look at is you got to go all the way to the weekly chart to find some structure here just above 300. And that resistance is right there, multi-week resistance at 300. And then your all-time high at 320. And that's it. That's it. Those are your resistance levels now on FedEx. There they are. There's one and there's two. So I think you look for FedEx to continue now on the back of this. Cost reductions working. Buyback increased. Tough not to like that. You know, better the guidance than what was expected. Tough not to like that. Right? And that's why the stock is trading up as much as it is. All right. So there you guys have it. All right. There you have it, folks. So those are kind of the newsworthy event. Oh, and then Apple. I forgot to mention Apple. Apple got slaughtered today. Antitrust lawsuit from the DOJ. Stock's down 4%. Huge move to the downside for the stock. One of the worst days the stock's had in a while. and you're coming up on some pretty big support levels. Right, so here you guys can see this big support level down here in the high 160s. I actually think Apple bounces from here. You can see this support level here. I actually think that I don't think Apple's going to break this level. At least not, right now. I don't think I think you would need like a real big pullback in the market for that level to break. I think the most likely scenario is like maybe another day of follow through and you try to bounce and you get you just kind of get choppy in here and you do something that looks like this. I think that's the most likely scenario. That's what I think. I think that's the most likely scenario. So I think that's a pretty big support level. I don't think we should maybe look for that support level to break that easily. All right. So there you have it, folks. All right, so there it is. That wraps things up for the live stream. I hope you guys enjoyed the stream. Keep an eye on that crypto setup. I'll let you guys know if I take position on that trade. It won't be tomorrow, but or maybe it did. Who knows? Maybe it did. Maybe I see something tomorrow. Maybe I get into Coinbase or something. I'll let you guys know, obviously. But keep an eye on that. I'll keep you posted as that trade develops potentially or not. Okay? So folks, again, go to ttgoffer.com, use that coupon code TTG121, click apply code. The price drops all the way down to $5.97. Check out, you're good to go. You have the double your money back guarantee for peace of mind. Again, if you can't make the $5.97 membership fee back at least one time after going through the courses, passing our quizzes, attending the study group, we'll give you guys back $1,194. That's our commitment to you to prove to you how much that we believe in this platform that we've created. You just go to ttgoffer.com. Everything on that page, you get included in your membership. No upsell for those things. Use TTG121, enter it manually, click apply code. Price drops to $5.97. That's also your renewal price. So next year, it doesn't matter. Our membership could be the $1,212 again, or it could be $1,400. You'll only pay the $5.97. All right. So you're locking yourself in, grandfathering yourself in at that price. And again, any questions, just text us 1-888-306-8783. Thanks for tuning in tonight, folks. Hope you enjoyed the stream. My accelerator members, I'll see you guys at 6 p.m. Eastern for our accelerator class. The rest of you, I'll check you guys all back tomorrow. Subscribe to the channel and smash that like button if you guys haven't done so already. Have a great